Hey guys, and welcome back to the channel. This is the second video of the day, so I hope you guys enjoy it. Obviously my previous video was about the real estate assets in central London, and this is going to be about DGOC and their third quarter report. Let's start with the big news, a dividend increase. So if you look year over year, it's going to be a 14% dividend increase, and if we just look over the past, if we compare it to last quarter, the second quarter of this year, it is a 7% dividend increase. Well, this is obviously great news for dividend investors. The reason why I particularly like this is because this means that their free cash flow has been increasing at a similar rate. And why is this important for me? Well, I've made calculations based on their free cash flow, based on their growth estimates, and to get the confirmation that your calculations are correct is very reassuring and just confirms how great a business DGOC is. So all in all, very happy to read this news. Even though I'm not a dividend investor myself, it's obviously very nice to receive like a 12-13% dividend yield based on your cost. So not bad at all. Besides that, they have obviously announced their third quarter results. I'm going to go to a few operating highlights and then I'll go through a few other things that they've gone through with this announcement. Thing is, there wasn't much news in this, so there isn't much new stuff that I can tell you today, but regardless, I think a few of these points are worthy of highlighting. The first one is the total net daily production. So it is a 8% increase compared to last quarter and a 17% increase year over year. This is higher than my estimate of 15% increase per year for the next 10 years. Obviously this is just 1 year, but it's nice to see this because it gives us some wiggle room in the estimations. And yeah, we just hope that they are gonna be able to get an average of 15% increase per year. So the rest is pretty interesting to read as well, but the final point I would like to point on this page is the expect to bring 2 PDNP unconventional wells onto production. And they're going to be producing about 1 MBOE PD. Why do I want to mention this? Well, this is about the carbon and EQT assets, so the assets they have acquired most recently. And why is this relevant? Well, when we look at the acquisitions, we look at the current production of these assets, and we do not take into account any increase of production by putting unconventional wells onto production. So the fact that they put 2 of these big wells into production in the near future actually means that they're going to increase their production as well. So while we can expect a decline in production over the long run, the fact that they are able to add new wells, or actually old wells, onto production again can actually mitigate the decline that we will see in the production. So I'm very happy to read that they have actually specifically announced that in this report. For the next part, I think this part is particularly interesting. So the third quarter adjusted EBITDA is $75 million. Why is it noteworthy? Well, if you compare it to last quarter, it's a decent increase, and compared to last year, it's also a steep increase. But the main point for me is, okay, in what way is their balance sheet protected right now? So they have a net debt to EBITDA calculation to protect their balance sheet, and obviously if your EBITDA increases, then you're able to take on more debt. We will get to that in a bit, but this just leaves some room for DGOC to acquire new assets, which we may be able to see in the near future as well because of this. Something else that was particularly interesting is this part. So they have a 52% operating margin, which is consistent with the previous quarters that they mentioned. However, I like this part. That is, they mention as well, like, okay, what would be our operating margin if we were not able to hedge? And you see that will be a steep decline. So their hedging program actually offers them this higher margin during these tough times, and it just gives you a lot of certainty as well. So all in all, I'm very positive about this. And obviously they only protect their downside with hedging, not the upside. So now that we see gas prices going to the $3.30 range, we could actually see that these operating margins might actually just increase because they are able to sell the gas at a higher price. Something else worth mentioning is this part, is their total unit cash expenses. It is in line with the the second quarter of this year, so no decline in this aspect, which obviously I would like to see decline in costs, but the fact that they mention it still when it's steady is also worth mentioning, because that means that they are busy in optimizing these costs, which is something you want to see in any business related to commodities, at least. At least that's a requirement for me personally. Something else is the base lease operating expense. They were able to reduce those costs, and here you can see the previous cost and now what the barrel of oil equivalent is right now. So all in all, that is very positive. And something else at the end is the capital expenditures. So they keep it low. We would like to see that as well, because that means that we have more free cash flow. So they're very focused on that, as we are expecting from this management team, but it's good to get the confirmation in this part. Then finally, and that's basically the last part, that's how little I can add to this news message, because everything else I've covered already when the news popped out, is they have currently available $221 million of liquidity. Taking into account the acquisition or their partnership with Oaktree Capital means that they are able to acquire assets of about $440 million. That leaves, in my opinion, enough room to actually acquire something, and combine that with a net debt to adjusted EBITDA of 2.2, which can be a maximum of 2.5, means that they are able to actually use this liquidity to actually acquire new assets. So if they find something, I'm pretty sure that they are going to acquire it. So that's it for today, guys. A short DGOC update. Hope you guys enjoyed it. If you did like it, please leave a like. And yeah, let me know down in the comments below what you think of this company. I would like to hear your thoughts about it. And yeah, hopefully see you guys tomorrow. As always, please keep in mind that I am not a financial advisor. The content on this channel and on my website is intended for educational and entertainment purposes only.